Hi, I'm Omar Kafagi, and this is the C-Suite of the Open Video series with TMX. Joining me today is Phillip Burns, the CEO of European Residential REIT. Thank you for joining me, Phillip.
Thank you for having me, Omar. It's a pleasure.
So, Phillip, talk to us about European Residential REIT and what you do.
Well, European Residential REIT, or ERES, is Canada's first and only multi-residential or apartment-focused real estate investment trust. We invest in high-quality multi-residential real estate properties in Europe with a primary focus on the Netherlands. We're very growth-oriented, looking to grow the company quite substantially, as well as very focused on giving a sustainable income distribution. On the growth side, for example, since the company was developed or launched in March 2019, we've grown our asset base by over 150%.
So, Phillip, you've had great success over the past year where you've actually ranked on the Venture 50 program. So, can you maybe talk to us about some of the near-term catalysts that impact your business, and what are some of the growth opportunities that you see for ERES?
Sure. I think, of course, we have to, at the outset, remember that we're in the COVID-19 pandemic. So if I set that aside for a minute, and perhaps we'll come back to that, the real catalyst for our business are the real estate fundamentals surrounding the multi-residential space in the Netherlands. The Netherlands has a very fast-growing population, both domestically and through immigration. Like other mature economies, you have people living longer, living alone, divorces, so a higher need for number of households. And at the very same time, you have an enormous shortage, or a very acute shortage, of new supply. So that creates a supply-demand imbalance that's very much in the favor of a residential unit owner or a landlord such as ERES. And then at the same time, you have an economy that's very diverse, a government that's been quite prudent, that has a significant capacity to support the economy where it needs to, for example, through fiscal measures in connection with COVID-19 pandemic. So fundamentally, it's the real estate dynamics, or the real estate fundamental characteristics that really support our business.
Okay, so let's focus a little bit more on the challenges. You've mentioned COVID-19. So how did it impact your business, and how were you able to adapt to the impact?
Well, first and foremost, we immediately put in policies that focused very much on our team, our employees, as well as our tenants. So we almost on day one, we moved everybody to working remotely. But the other big difference is in the Netherlands, they called it more of an intelligent lockdown, where other parts in Europe were very severe lockdowns, very restrictive what you could do. So the Netherlands gave you a little bit more flexibility, probably taking advantage of a culture that's very much willing to follow the rules, willing to work collectively. And so although you could have gone to the office, we insisted that none of our employees did. And they're still working from home or working remotely unless it's absolutely essential. So that was our first biggest challenge. But again, because we have a partnership with REIT, we have all of their experience for almost 25 years managing multi-residential real estate in Canada, all across Canada, as well as other parts of Europe. We have their crisis management expertise, their systems. We were able to make that transition. The other challenges, though, because we are growth-oriented, both on the acquisition side to increase the size of our portfolio, but also on our existing assets, the ability to grow our rent annually. We had to be much more considered during the COVID pandemic times, where we had a pause for acquisitions. We're reconsidering them now. And when we send out our yearly rental increases this past year, we were a bit more conservative perhaps than we normally would be, because we had to be aware of the situation surrounding the pandemic and some of the challenges that some of our tenants may be facing.
For sure, and that makes a lot of sense. So Phillip, when you're talking to investors about what makes ERES an attractive investment opportunity, what are some of the investment highlights that you focus on?
Sure. I think Most importantly, or certainly at the top of that list, would be it's an opportunity to invest in a very unique, growing Canadian listed European company. It's the first and the only one focused on European multi-residential real estate. Secondly, it certainly is the strong partnership with CAPREIT. CAPREIT has over a 20-year history, a very successful history of being a public listed entity, of being a multi-residential manager. And CAPREIT is not only the largest shareholder of European residential REIT, but they're also the asset and property manager. So on day one, we can have the entire strength of the CAPREIT machine or the CAPREIT platform that is there for the benefit of the ERES shareholders. We are able to buy in our target geographies very attractive assets at very good pricing, certainly on a relative basis to other places in North America, but also on an absolute basis. And because of the way things are financed in Europe, we can debt finance them very cheaply. So we create what we call a yield spread that is very attractive. And we have the ability through CAPREIT's experience and management's experience to maximize our rental growth once we own those assets. And then I think lastly, as I mentioned earlier, we have a conservative financial approach that allows us to provide very stable recurring distributions for our investors. And lastly, we have a very strong management team and a very seasoned board of directors that helps guide the company forward.
Great. So finally, Phillip, you've recently graduated from the TSX Venture to the main board, to the TSX. So tell me, what does that graduation mean for you and for your business?
I think firstly, it's a further sign of our maturation. So ERES was created in March 2019, so not very long ago. But for us to be able to go from a TSXV company to increase the size of our assets under management by 150%, and now to graduate to the TSX, I think is a big stepping stone for us and an external verification of our growth and our maturation. It's a significant milestone for our employees, for our investors, for everybody who supports ERES. And I think also as we still very much look to grow, and as we grow, we expect to raise more capital through the public equity markets. It increases our trading liquidity, as some people are much more likely, or some people aren't even allowed to trade on the TSXV. Now we're considered a more mature company, and would hope that that would lead to more liquidity in our stock price.
Great. Well, I wish you the best of luck, Phillip, and thank you very much for joining us today. It was a pleasure chatting with you.
Thank you for your time, and have a great day, Omar.